Joe Bell, Schaeffer's investment research senior equity analyst, with 3 ways to play the market. Also, Todd Horwitz, Adam Mesh Trading Group chief strategist in the house, will tell us why now is not the time to buy. And we should bring in Dan Stecich as well in the pits of the CME. Dan, of course, we're beginning with you because the action ended not at the lows today, but close to the lows. A little bit of negativity peering into the markets here.
You know, there is a little bit of negativity. Some of the new stuff here, you had Walmart today earlier. There's some worries about earnings, but I think the biggest thing holding the market back right now is the government and the nonsense that's going on in D.C. They've got to solve that. Every time they do it, this market backs up and gets really scared. Overall, you know, it doesn't seem like there's a lot of panic in the market, and I'm still somewhat confident.
Well, and Todd, one of those scare indicators is usually interest rates, which pop up when things get bad. Not so. Interest rates on the 10-year came down again about 5 basis points today.
Hi, Dave Bailey. Thanks for having me here.
Thanks for being here.
Interest rates have come down. Remember, we came up from 135.
It ended up 3 we're down 5 basis points. Ended up 3 basis points down. Go ahead.
We came from 135 up to 29. So a little bit of selling pressure there, or a little bit of reducing rates is normal.
So you don't think it's going to last? You think they're going up again?
I think interest rates are going higher, and they're going to probably go higher quickly here. I think this is a natural reaction in a chart, technically. And the traders have told you for weeks that they want interest rates higher. And I think the traders are going to win out because the Fed is in pretty much disarray right now.
But, Joe, you know, going back to what Dan Stecich said, this is an inhospitable climate right now for stocks or people who want to be bullish on stocks. If you look at what's going on in Washington, D.C., inside the Beltway, and yet we had similar negative atmosphere swirling around just a year ago, and we've seen what the market can do as it climbs the wall of worry. Where do you stand on investing in stocks right now, Joe?
Yeah, I think bigger picture, I think the uptrend remains. I think short term, yeah, I think let's not forget, in September we had one of the strongest starts to a month in the past decade. So perhaps a little bit of a breather, a consolidation would make sense here. Washington's even tougher to predict in the market, so I'm not even going to touch on that. But when you look at the market, it's all about expectations. How low or how high has that bar been set? So when we're talking about, one thing interesting is the VIX is 25% off its annual low, despite the fact that, yeah, financials have lagged this past week. We got a little bit of a bid up now, but Russell 2000 technology stocks up near all-time highs. So a little bit of uncertainty here, some short-term consolidation, but I think we could be in for a little bit of a rally here in the fourth quarter once it resolves itself.
All right, Todd.